Hi guys, it's Mel Miller here from Funky Little Shack, and I'm here with Ryan Carter again. Ryan is a mortgage broker. How are you going?
Good, thanks. Thanks for having me back.
Yeah, no, that's awesome. Now I want to talk about something that people ask me all the time, and that is they discuss, is a Funky Little Shack, is it a traditional build, is it a kit home, is it a modular or transportable? Funky Little Shack is a traditional build, and we have been looking at whether we go transportable or modular as well. It's really interesting because there are quite a lot of differences when you come to financing them. And this is where Ryan's got some really good information. So can you just discuss with us now, what is the difference? Like, can you finance? Is there any difference in finance? And if there is, how does that work?
I guess I'd probably start by saying your traditional build, which Funky Little Shack currently do, is way easier than a modular or a transportable loan. It's a standard, basically a standard home loan. We can use that as a complete valuation, so the banks can progress pay the builders, whether you're using a project builder for a huge two-story home or your Funky Little Shack. There's actually no difference. It's exactly the same. So just as easy.
Okay, so what if I wanted to, I found a kit home and I wanted to do a kit? How would that work? Could I get a loan from the bank?
The way that the banks will look at typically a kit home or a modular home is they actually won't put any value on the dwelling or the proposed dwelling until it's actually on site, affixed and completely finished. So I guess with trying to keep it as simple as possible, typically what we would see if someone wants to do that is that they already own the land outright, and what they will do is look to basically do a cash back or borrow the 100,000, 200,000, whatever it is. They will then have to pay for the kit home up front. The banks are unable to progress
finance it. No, I definitely noticed that too. That you buy a kit home, they want that money. Let's call it $100,000. They want that $100,000 up front. So you can't do that unless, of course, you're borrowing against your land or something like that. Or maybe you've got an offset account.
Typically an offset account or redraw if you've had your loan for 10 or 15 years and you've been chipping away at it a little bit extra.
Right. And you've got the money.
Correct.
But that's the only way to do it.
That's it.
Yeah. Okay. So what about with a transportable home or a modular home? That's basically what that means is that it's built in the factory, and then it gets put on a truck and shipped. So it's totally completed in the factory and shipped and located. How does the bank go with that?
In that case, it's pretty much the same story in a nutshell, in that it really needs to be finished.
Right, so you can't get a loan for that too, because obviously it's being constructed in the factory, the factory workers want their payment, and you can't get a loan for that.
Yeah, I guess the main difference for the bank between that, I guess, a traditional and that kit home where you are still getting a builder to come out and build it for you and that sort of thing, but the way the bank, I guess, views it is you're paying for the builder's labour rather than for them to provide the materials and all that. So I guess the builder has less liability to ensure the finished product, whereas if they're doing the full build, it's their work, their workmanship, their trades. They are buying the materials, providing good quality materials. So the bank will much prefer this method.
Yeah. So if I didn't have the cash to, if I didn't have the cash to buy a kit, or I didn't have the cash to have the transportable, I don't know, maybe I've got a rich aunt or something that I can borrow money from to actually do that. And then, so say if I did that, if I had a rich aunt, I could borrow the money to actually pay the cash up front for this kit home or a transportable home. Then it's now on my property. Could I now get some finance or something so I can pay my aunt back?
Yeah, absolutely. Once it's finished and on the block, you would need to provide or evidence, cost to put it on the block, but then the bank can look at putting a value on that dwelling, and then you can draw cash back and pay your own back.
Okay. So that's good. There's a few little ways then that you might be able to do it, but I definitely see also that it is a lot harder than a traditional build. It's a lot more difficult.
Yeah, a lot more difficult. The traditional build is a much simpler and smoother, less stressful process.
Thanks very much. Great information, especially when you're comparing, when you're thinking about putting a secondary dwelling in your backyard, and you're looking at a kit home, you're looking at a modular home or a traditional build. You know, it's really good information and really, really wise to understand what you can and can't do around financing if you need financing before you start. So we'll catch you next time.